If you're like me, you're curious what the housing market's gonna do. Everybody wants to know what the housing market's gonna do because we all feel like timing the market when we're about to buy a house is the best thing we can possibly do. Really, we don't wanna buy a home and then have prices tumble. That's a bad feeling. And nobody likes to be underwater when it comes to their mortgage on their home. So maybe you noticed recently that Warren Buffett put in a pretty big stake in some new home building companies. Let's take a look. Berkshire Hathaway buys stake in D.R. Horton stock, cuts GM holdings. So they got rid of a lot of their GM holdings, or they cut them down, pared them back significantly, and they took a 6 million share stake in D.R. Horton, which is the biggest home builder in the country. And that's Berkshire also took small positions in home builders Lennar, valued at less than $20 million, and NVR, valued at around $70 million. So what does it mean that Warren Buffett is investing in home building? Let's take a look at what Zillow is saying. Zillow expects prices to rise by 6.5% over the next year. Now, the first thing that I would say about looking at Zillow's numbers versus local numbers is that because interest rates went up, real estate is extremely local. It is hyper local. So it's going to be a little bit different everywhere you look. There are different in and out migration patterns. There's different earnings. There's different, it's just different everywhere you look. There are lots of factors that are going to make a big difference. But it is something to note that Zillow is saying that they think that prices will rise by 6.5% over the next year, because if you're in Salt Lake City, we have been named as one of the most overpriced and most likely to suffer a correction markets in the country for the last year or two. And that's significant because the prices that have come down in Salt Lake have been between 7 to 11%, depending on where you're talking about. So if we're going back up 6.5%, then really what we're talking about is kind of a minor blip in home equity values. And if you're someone who hasn't had to worry about the loss of income, then really this doesn't make that much of a difference for you, because the way I'm seeing this is that we have interest rates that have gone up to try to slow the market down, but that demand, if anything, is only increasing with time. There are more people entering the market. We're at a point in our demographics where there are more millennials at first-time homebuyer age than there were baby boomers. And I really sincerely believe that prices are going to take off again. It's almost inevitable. So what we have Zillow saying here is that despite slow sales, prices are up. We have home prices going up, and they really are thinking that it'll spike about 6% by the end of this year, and it expects the trend to continue even higher, with home value growth predicted for 2024, especially if you consider that we potentially are moving into an election year, and politicians do their very best to encourage stimulation, economic growth and stimulation. So let's see, when was this published? It was published August 22nd, 2023. So what Zillow is saying is that the average home has risen in price by 5.8% between January and the end of this year, and they're expecting it to go up 6.5% between July of this year and July of next year, 2024. Again, this all really comes down to the fact that there just are not nearly enough homes on the market, and demand is through the roof. Zillow is forecasting a total of 4.2 million home sales in 2023, a 17% decline from the year before. This lack of inventory is fueling a supply and demand crunch that has property values rising. A lot of this is exactly like I've been saying for a long time. It's mostly that people bought a house at 3, 4, 5% interest, and they don't particularly want to let that interest rate go, especially after such a short period of time. With some time, if they're unhappy in their house, that may begin to change. They might have enough equity that they feel it's worth it, especially if in the next year or two interest rates do come down a little bit, which potentially they will. So overall, what we have right now is a very interesting market where rates went up, prices came down a little bit, demand is still very high, supply is very low. So we have these competing forces. It's almost like what happened in the 1980s that we called stagflation. It's a strange place where everyone's kind of expecting a 2008 to happen again. I think because we went through it, we know what to expect. We know what happened there. And it's always a lot easier to know what's going to happen than to not know what's going to happen. If you're curious about the housing market in your local area of Salt Lake City, reach out to me. I love hearing from you, and it's so fun to give you all of the details on your specific area and help you get where you need to go. I really enjoy hearing from you, and thank you so much for watching, and until next time, I'll catch you then.